Hey traders, welcome back to the weekly Forex Forecast. Last week we had 5 major interest rate decisions, and those interest rate decisions in today's video, I'm going to talk you through how the outcome of those are affecting the asset selection and the markets that I'm going to be looking at trading this week. The key thing to pay attention to this week is the US dollar. We had FOMC last week, and despite a double miss on headline and core on CPI, where it came out hotter previously, and also PPI, the Federal Reserve essentially increased their inflation expectations, but did not change what's called the dot plot, essentially saying, yes, they expect inflation may tick up a bit, but they're confident that it's going to come down eventually, and therefore they're not going to actually take any additional steps to restrict monetary policy in 2024 this year. And we had an initial sell-off, but the US dollar by the end of the week reversed that, and I'm going to talk you through why that was the case. But either way, we go into this week now with a potential major breakout on the cards for the US dollar. We've had the initial push higher, and we've had an attempted sell-off, a failure to make a low, and now we've had a push higher and a reversal. Once we break this high, this is going to potentially cause short covering into the next one, and that is how you tend to get major reversals in markets. You get this kind of cascading effect of short covering on a smaller breakout and then short covering on a larger breakout where they fail to make new lows each time. So coming into this week, US dollar long plays are at the top of my list, and I'm going to talk you through the setups based on the data out last week that I'm going to be looking at trading this coming week. Okay, so let's move on to the asset selection here. What are the best markets that are setting up this week to the long side to the short side? And the quantitative data this week in and of itself does need some qualitative statements, because we have a problem here, which is that the Japanese yen, which is the best short, and again, throughout all of the narratives we've seen about the Japanese yen rallying on the exiting of negative interest rates, which we got last week, we did see Japan exit negative interest rates. The quantitative data has been saying the whole way down, do not buy the Japanese yen, you should be short or do nothing. Buying this currency is not an option. And it looked like last week there may be a window of opportunity with the exiting of the negative interest rate regime to step in maybe and start to look at buying the yen. However, we can see quite clearly, quantitatively, the data is telling us that there are no buying opportunities that we should be looking at in the yen. It's at risk of further decline. And actually, based on what we're seeing here in the data, after the BOJ have exited their negative interest rate regime, it tells me that the Japanese yen is in actually a bit of trouble as it currently stands. Now, that brings with it a unique set of problems, because in the US dollar Japanese yen chart, we are above the 150 level. So if we step in and short the yen once again, we run into an issue, which is that we're above the level historically where the Bank of Japan, Ministry of Finance in Japan, has come out and intervened in the Japanese yen to prevent further weakness. So unfortunately this week, although the Japanese yen is quantitatively the best short and the weakest currency that we should be looking at to the short side, the issue is the intervention from the central bank. I do not want to step in, short the yen, and then be on the wrong side of an intervention in the yen to push the value higher from the monetary authorities in Japan. So for that reason, this week, yen shorts are off the table. So what does that leave to the short side? It leaves the Swiss franc to the short side, which I'm going to be interested in. It leaves the New Zealand to the short side. And I usually like to get 3 to the long side, 3 to the short side. So with the Japanese yen off the table because of the risk of intervention from the Japanese authorities, it does leave the Swiss franc and the New Zealand dollar. Now to the upside, we clearly have the Australian dollar and we have the euro. So Aussie New Zealand to the upside, Aussie franc to the upside, Euro New Zealand to the upside, Euro franc to the upside. These are pretty clear cut in the data that I want to be looking at going into next week. So that really leaves the third long currency and the third short currency that I'm looking at. And this is where we need to pay attention a little bit to what happened last week, because we've got in the data, yes, the pound does have a green performance wheel, but it has a red arrow here. And that's telling us that the performance metrics are deteriorating. It tells us the momentum of this currency is actually to the downside. And vice versa with the dollar, we have a red performance wheel, but we have a green arrow. And this is very close to crossing the 0% bound from red to green. And when that happens, very often this is a sign of a major reversal incoming or a major breakout of a much larger consolidation. So adding in the final three currencies, what I want to do this week outside of what we've just looked at, I want to look at US dollar long plays based on what we've just discussed. And I'm going to be looking at those versus the Swiss franc, of course, the New Zealand dollar, so New Zealand dollar to the short side, US dollar franc to the long side. I would be looking at US dollar yen normally, but because of the intervention, I'm not looking at any yen pairs this week because I can't buy it, but also I don't want to short it if they're going to intervene or there's a risk of them intervening. And so that really leaves the pound or the Canadian dollar, as a currency to look to the short side versus the US dollar. Now, the reason I like the pound is because last week we had a Bank of England interest rate decision. Yes, they held rates, but the hawks who voted for interest rate hikes in the last meeting capitulated, threw in the towel, and they actually voted to hold. So this was a dovish meeting, and I do think we're going to see further weakness because of that follow through into the pound to the downside next week, because traders are now looking at this and saying, yes, okay, they're holding rates, but they're moving in the direction of actually cutting rates because those members who wanted to actually raise have thrown in the towel. So the direction of travel is clear, it's towards cuts. We also had the surprise cut from the Swiss National Bank last week. So again, I think we're going to get further declines in the Swiss franc next week. So for that reason, just to summarize, what I'm looking at coming into this week is Aussie New Zealand to the upside, Aussie franc to the upside, but also going to be looking at pound Aussie to the downside or pound Aussie short positions. I'm also going to be looking at Euro franc to the upside, Euro New Zealand to the upside, and also Euro pound to the upside. And we're also going to look at US dollar Swiss franc to the upside after that SNB rate cut, US dollar New Zealand, which of course is New Zealand dollar to the downside, and also pound dollar to the downside after the shift in the voting in the Bank of England meeting last week. Okay, so let's have a look at the markets themselves, going through the watch list that I have here for the Forex markets next week. But starting with crude oil, we'll look at crude oil every single week. And this is a market that I've been looking at in previous videos to the upside. And the reason for this is that crude oil is actually outperforming in the Hedge-Trading app in the commodity sector. So I really want to be long or do nothing in crude oil. I don't want to be short in this market next week. And the other thing to note is this is also why I prefer pound shorts this coming week over CAD shorts, because we looked at the fact we could be short the CAD versus maybe the dollar, or we could be short the pound. We have the fundamental driver of pound weakness last week with a more dovish Bank of England meeting. Whereas on the Canadian side, we actually have the Canadian dollar somewhat supported by the strength of crude oil, because obviously Canada is a large exporter of crude oil. So the price of crude oil goes up, the demand for the Canadian dollar goes up. And this is something that is worth noting because I get told sometimes in the comments in YouTube that I only look at, for example, the 4-hour chart. When I present this analysis to you, yes, we're looking at the 4-hour chart, but there has been work done on higher time frames. It's just we don't have time to go through everything in a 20-minute video. So we look at the 4-hour chart, but other analysis has been done. It's very much like with the scores as well. Just because we're looking at the Canadian dollar, there is cross-asset analysis which has gone on, like the strength of crude oil, which feeds back into the scores we discussed earlier on in the video. So coming into this week, the levels are the 83.73 and the 77.98, and these are priced with a 70% chance roughly of the asset trading within this bound or this range. So any pullback in crude oil, you can look for one or two opportunities that I would be interested in. Any breakout intra-week to the upside and a pullback, so you get this kind of bull flag, you get the rally, you get the consolidation, and then before it takes out the lower bound, it rallies with momentum. Momentum precedes price, and you can look for the follow through into the prior high and above the 83.73. Now, if you've got a 70% chance of staying within this range, of course, if you breach this level, you essentially only have a 30% chance of continuing. So it's a good opportunity, if you are long, to actually book profits. And if we fail to break out intra-week and we just continue to correct, and you see this often, and it comes down, breaches the 77.98, especially if we take out these lows, this is going to be a great opportunity down here to look for a 1 or 2 day reversal, especially if we breach this and test these lows, down in these areas. And that is all I'm really looking to capture. If I trade from the upper or lower bounds, I'm looking to capture 1 or 2 days worth of movement. And in fact, even on a breakout, you probably only catch 1 or 2 days worth of movement because you only have 5 trading days, right, within a week, and you're not going to capture the entire week. So, 1 or 2 days worth of volatility within a week is a good target to try and capture in any asset. Moving on to the Aussie pairs, and the Aussie franc setup is the first one we're going to look at. Would normally be Aussie yen, but of course not looking at the yen shorts anymore because of that risk of intervention. So we start with Aussie franc. Aussie franc has a really nice technical setup. We've broken out of this consolidation with momentum. It's pulling back. So what I'm going to be looking for coming into this week is any continued pullback. You can look for a breakout intra-week and a pullback and a follow through into the 0.5897. I would not be surprised to see this push higher, very much like on an entry when it breaches a lower bound and you can look for an entry, at a previous support. On an exit, it's the same. You breach the upper bound and trade into the high, that would be a good candidate for booking any profits on longs. And if we continue down, take out the 0.57960, and especially if we test the prior low over here, this would be a great place to look for a 1 or 2 day reversal to the upside in Aussie franc. I cannot short this market. I can either buy it or do nothing. Selling this is not an option for me next week. Next is Aussie New Zealand. Now, I'm also either going to be buying this or doing nothing on this next week. Again, we have really nice momentum. You can see how we've driven up in the 4-hour chart here, and we're starting to consolidate. So I'd look for a continued pullback, any breakout to the upside in Aussie New Zealand. That is a good opportunity next week to start to look for further advances into the 1.09320. And of course, if we pull back and we test, in fact, not just test, but breach, I like to see the market pushing through the lower bound here at the 1.0816, 1.08106. And if we test this prior high and we have this kind of stair step where you have a consolidation, you break through, you consolidate, you come back and retest, that does set up a nice area here to start to look for 1 or 2 day reversal in Aussie New Zealand to the upside next week. Moving on to Pound Aussie. Now, we already had nice momentum to the downside and we broke the prior low here. And you can see a failure to make a high over here. This actually sets up this kind of head and shoulders. So any continued pullback in this market is viewed next week as an opportunity to look for intra-week breakouts down to the lower bound at the 1.92 and onto this low as well. And that would be obviously a profit-taking opportunity for any intra-week shorts. Alternatively, if we continue to pull back, and I like it when we have a lower bound like this and it sits right below, in this case, a prior high. If we pull back and we retest this high and we breach the 1.9485, this is an area I will be looking for a 1 or 2 day reversal in Pound Aussie next week. Moving on to the Euro pairs, starting with the Euro franc. Now, of course, we had that surprise cut from the SNB. I do think the ECB are not going to be far behind. However, for now, going into next week, I think we're going to see some follow through to the downside in the Swiss franc. At the very least, Euro franc should be supported and any downside should be capped. So you can already see we had that spike up, we had the SNB, and we've started to correct and consolidate. So any continued pullback is viewed as an opportunity to look for that bull flag breakout. A continuation of the sell-off in the Swiss franc, and in this case, the rally in Euro franc off of the SNB interest rate decision. And any intra-week breakout above the 0.97630 and into the high, that would be a good place to look for profit taking next week. And any continued pullback below, in this case, the 0.96370, again, you can see we have that kind of stair stepping where you've got this kind of consolidation and then price breaks out and then it pulls back. And if it does pull back and retest this prior high below the 0.96370, that would be a great place to start to look for a near-term buying opportunity next week in Euro franc for 1 or 2 days reversal to the upside. Next is Euro New Zealand, another market that's been trending to the upside on the 4-hour chart, and you can see we're actually closing up near the highs here of this recent uptrend. So any pullback in this market is viewed as an opportunity to look for an intra-week breakout up to the top of the range here at the 1.81798, and that would be a good profit-taking target for any intra-week longs in Euro New Zealand next week. Alternatively, if we pull back, and I really like this setup if we do pull back below the 1.7888, because if we pull back, we not only breach the lower bound, which means we have a 30% chance of pausing or reversing based on the market probabilities here, but also there's a key area of resistance, broken as support, and also a support. So we've got a support, we've got the level, and we've got this prior high. So as soon as if this market pulls back and starts to breach this lower bound, we're running into not just previous support, but also resistance. This, in my opinion, is likely a good setup next week if we can breach the 1.7888. I'm going to be looking for 1 or 2 days reversal to the upside in Euro New Zealand. The next Euro pair we're going to look at is Euro Pound. Now, again, with the BOE, we saw that weakness. We saw that dovish meeting as they shifted the votes towards, 2 votes which were for a hike and then went to a hold. So the dovish outcome of that saw the pound sell off, and we broke out of this really choppy consolidation. And actually, this momentum, there's a very good chance this follows through to the upside. So I'd be looking for a pullback first next week. For those of you who like your trend lines, perhaps we come back and kind of retest the trend line down here. That would set up the opportunity to look for a breakout and a follow-through trade into the upper bound at the 0.8621. That would be intra-week where I'd be looking at booking any profits. Alternatively, if we retrace, and it may be difficult to retrace the entire Bank of England move. Very often you get those interest rate decision moves, they pull back and then they follow through. So I wouldn't be surprised to see this go intra-week. But being reactive, if we don't break out, we just continue to consolidate, and we take out the low. This would also be an area I'd be looking for 1 or 2 days reversal to the upside in euro pound. I can either buy this or do nothing. Selling this market is not an option for me next week. Moving on to the dollar pair, starting with euro dollar. Now, I've got this on the daily chart because I want to show you the bigger picture here, because we cover euro dollar every week. This is an asset I look at every single week, whether it's a good opportunity or not. And coming into this week, when you've got two fairly strong currencies in the scorecards that we're looking at, in other words, I'm looking to be long euro and I'm looking to be long the dollar, you tend to be able to range trade, from the upper or lower bound, those kind of markets, because when you've got two strong currencies or two weak currencies, they tend to just chop around. So to begin with, that sets up either I can, sell this or buy this next week. It's not really a problem quantitatively. However, there is a bigger issue here, which is the technical setup. Here is a failure to make a high, which makes this the risk of a capitulation down below this low, as all of the longs who are buying this all the way up and they've got stop losses down here, they capitulate, they cover their long positions, and if you're long, the only way you can do that is to go short. So you exit, your long by, if you bought something, you have to sell it in order to get out, right? Whether it's a profit or a loss. So there are stop losses down here, but very similar, and in fact opposite to what we looked at the beginning of the video with the DXY. You can see we've got a second head and shoulders. So we've got a head and shoulders, which is a reversal pattern, not because it's a magic pattern or anything like this, but because of the psychology of traders who notice the failure to make a new high, they lose confidence and they exit their positions or their longs below the prior low. That's what causes head and shoulder reversal. And you have a mini one within the right shoulder. So now you can see your head and shoulders within the right shoulder of a bigger head and shoulders. That is a pattern that often leads to major breakouts or reversals. So the issue I have here, I can either quantitatively buy this or sell it, but based on everything we've just discussed, I don't want to buy this here, because if this breaks this low and we see a liquidation of longs, this could break this low with momentum. And then certainly, if it continues and breaks this low, we've got a major breakout. So for that reason, I'm only looking to be short this next week, even though they're both kind of strong currencies. So with that being the case, any pullback in this market next week, I would be looking for a potential breakout to the downside into the 1.07310. However, intra-week ones may be difficult because they're, both to the long side next week. So generally speaking, you want to range trade two strong markets. So the preference next week would be if we can pull back and we can breach the 1.08840, anywhere above this level is where I would primarily be looking for an opportunity to short euro dollar next week. Moving on to US dollar Swiss franc, I like this as well because you can see the big run up, then the consolidation, we test the high, we fail, we test the low, we fail, and we get this kind of rectangular sideways consolidation. Then we break out. So I like the fact we've got this major kind of consolidation sitting right below the lower bound. We of course had the SMB, and going into next week, I do think we see further advances to the upside in this asset. So any pullback, this kind of bull flag taking from the SMB Swiss franc sell-off, any kind of bull flag is viewed as the opportunity intra-week to look for a breakout and a rally into the upper bound at 0.9051. And conversely, if we pull back, this sets up a really nice kind of buy the dip, because really we're looking at two things. You can either at all times really buy on a breakout or a pullback. You can buy the dip or you can buy it as it's moving up. You can buy it as it's coming down or buy it as it's moving up on the breakout. So you've got your breakout set up there, but what happens if we just pull back and we retest? So we breach the 0.8902 and we test this major consolidation high. This is going to be a great place next week to look to buy the dip for a 1 or 2 day reversal in US dollar Swiss franc. Next is New Zealand dollar. This is a really nice market. We've had this breakdown and you can see we tested it was this low. Tested it and failed, came back, we tested it, attempted to rally, and now we've sold off. So I would not be surprised to see this pull back and even retest this low above the upper bound. But as we pull back, I would be looking for potentially that intra-week sell-off, pull back, and then follow through down to the 0.5929. So selling on the breakout. But also, I'd be interested in selling on the pullback. So selling the rip, especially if we can break the 0.60579 and test the initial low over here, which the New Zealand dollar had trouble actually breaking through, but eventually has. So retesting essentially broken support, turning resistance. This would be a great place next week to look for 1 or 2 days reversal to the downside in New Zealand dollar. And the final dollar pair before moving on to gold and silver is pound dollar. Really nice sell-off from the Bank of England, and I'd be looking for this to flag, consolidate, correct, and you can look for that intra-week breakout to the downside. So selling on the breakout, follow through into the 1.2500 area. And if we continue to pull back and we breach, and I like the fact we've got this high over here, if we breach the 1.2699, this is where I'm going to be looking for a 1 or 2 day sell-off next week in pound dollar from above the upper bound. Wrapping up the video with gold and silver. Now, because of the bullish bias in the US dollar, I would on balance rather be short, gold and silver, generally speaking. But how I'd prefer to play it is I can use gold and silver both ways. Whether we get a strong dollar or a weak dollar, reactively, we can use the gold and silver markets in different directions. And that's how I'd like to play gold and silver next week. So if we get a pullback in gold and we test the 2131.93, this would be an area I would be potentially looking for a 1 or 2 day reversal to the upside in gold. But this is really a plan B. My plan A would be to short silver on the back of the bullish strength. So I would be interested in gold next week from the lower bound, but only if we actually see some strength coming into the dollar first and then this sets up from the lower bound. My preference is for a bullish dollar. Therefore, the next market we look at, which is silver, that is my preference for trading next week over gold. Okay, so wrapping up the video with silver, I'd rather be short silver than long gold next week because of my bullish bias on the dollar. So what I'd like to see is I'd like to see this market pull back and test and breach the 25.39. This would be great because not only would it become overbought on the week, but it would actually set up a textbook head and shoulders because we'd be coming back testing the prior high here, and that would be a great opportunity to look for 1 or 2 days down. Now, if this sets up, you could actually hold on to this and look for the head and shoulders break over the next couple of weeks. However, I am only really looking at short-term trades here, intra-week trades for 1 or 2 days. So that would be a great setup next week if we come up and test the upper bound in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.